Welcome to our discussion on understanding your personal finance. Today we'll look at how to create a budget, how to calculate sale prices and discounts, and how to figure out percent increases and decreases. So the steps to creating a budget are pretty simple, right? You want to figure out what you're bringing in every month, and then you need to figure out what you're paying out every month. Subtract your expenses from your income, and then figure out if you can put any of your hopefully remaining funds into savings, long-term goals, like if you want to buy something in the future, or just have money for what we call, a rainy day, some sort of emergency fund. So your net income is simply your total money or gross money that you make minus all taxes, right? So that's what you have to work with, right? You can't work with your gross income because the first thing you got to do is you got to pay Uncle Sam. So here's a simple example. Jamie graduated from college in 2013 with a degree in accounting. Her first job pays an annual salary of $52,000. How much should Jamie expect to pay in federal income tax for this salary if the federal tax rate is 15%? Now, if you really want to figure out your own taxes, the U.S. government has, you go to irs.gov and they have a website where they will tell you exactly what your tax liability is. It's how it's computed can be quite complex, but it's actually a pretty simple pattern once you see the pattern. And then there are all sorts of online kind of calculator tools where you literally just put in, here's my yearly salary, and it spits out, here's how much you're going to owe. So it's not that difficult. Unfortunately, it's not as easy as just doing 15%, but for this example, we'll pretend that that's the case. So we just take 15% of that $52,000, and we say that Jamie's going to owe $7,800 in taxes. Now, Priya just graduated from a liberal arts college, acquired a job as a sociologist. Her yearly salary is $34,500. If the federal tax rate is 15%, the Social Security tax rate is 6.5%, and the unemployment tax rate is 6%. Determine the following: her yearly taxes and monthly take-home pay. So basically, all you have to do is add all those taxes together. Now, you could multiply them individually like they have here, but you could also just add those percentages. You could go 15 plus 6.2 plus 6, right? Add those all together, get 27.2, and then multiply it by that, and you would get this same number. So the nice thing about percentages is you can work them those two different ways. But in any case, there's the total tax liability, and if we take that amount, subtract it from her gross salary of $34,500, then take that remaining amount and divide it by 12, you can see that she should expect to take home a little more than $2,000 a month as her monthly salary. And then based on that, you could start figuring out a budget. Okay, monthly rent, $600. Spending $250 a month on rent, on gas, $150 on utilities, $600 for food and entertainment, things like, eating out, your cable bill, Netflix, cell phone, things like that. $210 for student loans. You can see that adds up to $1,810. And, that means that basically when all is said and done, she has almost $300 left each month, right? $283. So with that $283, you could start putting, $250 away every month into maybe you put $200 away maybe into a long-term savings account, something that you don't want to touch. Leave the other $53 to put into a short-term kind of, maybe just in your savings account that doesn't really earn a lot of interest, but it's there in case you have an emergency. Because maybe one month you have to buy a birthday present, you have to spend more than $600, those types of things. So you always have to budget for things to shift and change. So as we said, there's the $283 that's left over. It wouldn't be a good idea to just plan on being able to put that $283 away, and not be able to touch it. So you don't want to put it in an IRA or something that you would have to pay fees if you need to take that money out. You want to put, a decent amount of it into some sort of long-term savings plan, or, into an IRA, or even into some stocks and bonds and those kinds of things. But you want to leave some cushion behind just in case your budget shifts. Now, of course, if you know how to work with Excel at all, it's really good to put this thing into a spreadsheet and be able to, it can do the math for you. And then you can go in there and, you get a new cell phone plan, and all of a sudden your cell phone price goes from 60 to 30. You go in here and you change 30, and bam, it automatically changes your total. And you know exactly, what your new budget is, and those types of things. So learning to work with a spreadsheet, a simple spreadsheet, whether it's Excel or whether it's Google Sheets, the free version. It's really important. In fact, most employers nowadays want their employees at least to have basic rudimentary Excel skills. So if you haven't already learned how to play around with Excel or Google Sheets, please start doing so as soon as possible. There are, literally thousands of videos on YouTube that will show you the basics and how to do what you want to do, how to create a simple spreadsheet like this and be able to calculate running totals and all that, simple kind of things. So it's a really good skill to have. I highly recommend you get into it as soon as possible. Okay, so for instance, if you had everything, the total is now dynamic. You have defined this cell as summing up all of this. When you change anything, your total will change. Then you can have your salary up here. You can put consulting in here. This sums up that, right? You can have another cell that maybe takes the difference of those two to see how much money you have left over. There's all sorts of fancy things you can do with it, right? So there's your remaining funds, where you just took this cell is basically going to equal this one minus that one. And so as you change these values, this is going to change. And then, of course, this is going to change accordingly. So that's the nice thing about having spreadsheets, is it enables you to move things around, change things, and you're not just working on paper, right? You're not having to erase everything and recalculate stuff, et cetera, et cetera. So if you want, go ahead and stop this, fire up your spreadsheet of choice, and see if you can use Gail's remaining income and increase it by $50 a month for utilities and see what happens. Okay, so did you get a change of $1,079.33? Hopefully you did. Okay, some definitions. List price is the price of an item that is listed for public sale. The discount is the reduction that is going to be taken off of that price. And then the sale price, sometimes called the net price, is the actual cost of the item that you're going to pay after whatever discount is applied. So you can think of sale price as just basically list price minus discount. So Tennis Star Shoes is having a sale. A pair of tennis shoes has a list price of $129.99. The store is offering a discount of 25% off of the list price. You can determine the sale price of the shoes before taxes by simply taking that $129.99 and subtracting 25% from it, right? So here's the 25% off. So you're going to save $32.50, and you can take that $32.50 away from $129.99 and be left with how much the price is. But here's a shortcut, right? Once you start understanding how percentages work, you realize that every thing out there, every item out there starts at 100%. $129.99 was the full price. That's 100%. That's 100% of its price, right? And this is 25% of its price. Well, if we subtract 25 from 100, aren't we left with 75% of its price? So instead, you could have taken $129.99 and simply multiplied it by 75%, 0.75, and you would get the exact same $97.49. So let me ask you this. If something was 20% off, what would you multiply it by to get what was left over? And hopefully you're all telling me 80%, 0.8. Yeah, that's exactly it. So when we talk about a percent difference, right, a percent decrease or a percent increase, you're really just playing with 100. So you start with 100%. If you have a percent decrease, you subtract that from 100. If you have a percent increase, you add that to 100. So you can always just simply multiply the item by whatever the decrease or the increase is and then add it back, and that's fine. But you can save yourself a step by just doing the 100 minus or 100 plus technique. So for instance, if she bought a stereo on sale for this and the list price was $330.75 and you want to figure out what percentage is the discount, well, this is the 100%. This is what it is afterwards. It's going to be some other percentage. Well, you can just simply figure it out by, sure, doing the difference and go, okay, there was that much off, and then figure out what percentage that is of the starting point. Or you can do some simple translation, right? 198.45 is, right? What percent of 330.75? The word is always going to be equals. Of is always multiplication. Percent always means divide by 100. So you're basically asking the question, this much is what percent of the original price? And if we do the math, right, and we go, oh, it's 75% of the original price, then I know the discount was the 25%. So you could always do it this way and then get 3.3075x equals 198.45, right? Because all I did was I divide this by 100, which doop, doop, moves it twice. Then you would divide both sides by the 3.3075, right, to solve for x. And that's how you get your answer. Or you could do it the long way, right? X percent of 330 equals that, right? So you can see that x times this, blah, 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 blah. You divide by it, you get 0.4. Well, what is that as a percentage? That's 40%. If you did my stuff in the calculator, you would have got 60, right? This would have been 60% of it. And then you would subtract that from 100 to see that the discount was 40%. So either way, it works fine. See if you can do this one, right? Computer was on sale for $427. The original price of the computer was $1220. See if you can figure out what the percent discount is. Did you get 65? All right, so percent change. Percent change is when basically something changes by a certain percentage, usually over time. And percent change is very simply just the new amount that it is minus the reference value divided by the reference value. This all sounds confusing. Think of it as new value minus original value divided by original value, and then you multiply that by 100 to turn it into a percentage. It'll make more sense when we see a simple example. So you buy a tablet PC for $1,200. 1 year later, the same thing only costs $900. Oh, isn't that always the case? Determine the percent decrease of the price. Okay, well, what's the price now? $900. What was the original price? $1,200 divided by the original price. So you can see that it went down $300. What percentage is that of, right, the $1,200? So a percentage is a ratio, right? So you can do this, and you get 3 over 12, or 1/4. Of course, it's negative, but it's negative because it decreased. 1/4, of course, is 0.25 or 25%. And the negative just tells us it went down by 25%. See, so it's pretty easy. It's just new value minus original value divided by original value. They call it reference value, but just think of it as where it started, right? It's where it ended up minus where it started divided by where it started. See if you can do this one. All right, did you get the correct answer? All right, the last example. This bike company uses a 40% profit margin to determine the list price of their products. If the company buys a bike at wholesale for $450, what would be the list price of the bike? Well, they have to add 40% to it. So they figure out 40% of their cost, which is $180. They add the $180 to it, and they get $450. But remember, a 40% increase just means the new price is 140% of the old price. So you could have just taken $450 and multiplied it by 1.4. That's 140%. And you would have gotten straight to $630. Because a percent increase is just 100 plus that percent, right? 100 plus 40 makes it 140%. So again, that's just a shortcut if you feel comfortable with it. If not, you can always just multiply by whatever the percent increase or decrease is. And if it's an increase, you're obviously adding. And if it's a decrease, you're obviously subtracting. All right, one last check. See if you can do this one. And did you get the right answer? And that's all I've got for you.